And we hear a myth all the time in the real estate world that a bank would rather do a foreclosure over trying to prevent foreclosure. They would rather do a foreclosure than do a short sale, or they'd rather do a foreclosure than do a loan modification. Can you shed some light on that?
Yeah. So I mean, I think all of this is what naturally comes out of a very difficult recession where families' wealth are being destroyed. And more unsustainable mortgage products prevailed in the past decade, and it put communities and families at risk, and it continues to be a problem. And I think through that, all these sort of really inaccurate accusations can come out of. Banks made a lot of mistakes. There's no question about it. Most of the financial institutions that made these mistakes are out of business today. But when it comes to choosing what's the best outcome, the least expensive option for a bank is to keep a family in their home, performing. Modify them, refinance them, do whatever's available from a program product standpoint, assuming that when you deal with a particular scenario that they will be sustainable after you give them that new program. So that's number one. The second is do a short sale. Short sale is by far the least expensive alternative over a foreclosure. And a foreclosure, when you get a distressed asset, a foreclosed property, by the time it gets in the hands of the servicer and put on the market for sale, that property may not have been kept in good repair. It could have been gutted, the interior of the home. We see homes that are stripped of down to copper pipes and everything else that are eliminated. And it drives down the homes of the whole neighborhood. So one foreclosed property generally will sell at a discount of 20 to 30% over surrounding inventory in the neighborhood of non-distressed sales. So if you can get a short sale transaction, that can go on the market as a non-distressed transaction. It'll go much closer to what we call BPO, broker price opinion, closer to market, and you end up with a shorter carrying cost of an asset that's not returning any revenue to the institution. So, I mean, from a pure financial sense, take aside how much it benefits the family in distress by not having to go through foreclosure. They get to stay in the home. They transition much more safely and soundly for the family, and quite frankly, with better honor and dignity as a result. But if you take that to the next level, just pure economics, short sale is by far the least expensive option over foreclosure.